Hello, welcome. Today we're exploring LVMH. LVMH is a French luxury goods focused conglomerate company that operates across various sectors including leather goods, fashion, perfumes, jewelry, cosmetics, and watches. It is considered a world leader in high quality products with a sizable portfolio of renowned brands. Prominent brands including Louis Vuitton, Dior, Fendi, Moët Chandon, Bulgari, and many more are part of the company's brand portfolio. Concerning its operational model, it aims to maintain the individuality and prestige of each brand while strategically leveraging collective strengths and resources to enhance the overall performance and competitiveness of the conglomerate in the luxury market. Further, almost half of its revenues come from fashion and leather goods. In 2021, 48.11% came from fashion and leather goods, and in 2022, 48.81% of its revenues came from fashion and leather goods. Some other channels from where LVMH generate revenues are the online sales. So they have been investing in its e-commerce platforms, enabling customers to purchase its luxury products online through their dedicated websites. Also, it earns a significant portion of its revenue through the direct sales of luxury goods across its brand portfolio.
To analyze LVMH deeper, we can use a comparison with another company, a similar company. In this case, is Kering. Kering, also a global luxury group which owns brands such as Gucci and Balenciaga, was established in Paris and follows more or less the same activities that LVMH does. When we look at their financials, we can start by seeing that LVMH is much bigger, especially when it comes to their total assets. However, when we dive a bit deeper, we can see that they have more or less the same strategy. In the case for their cash flows, we can see that all of it comes from operating activities. However, when we look into financials, it's much different as Kering pays back their shareholders more than LVMH, and LVMH invests more than Kering in their investment activities. Additionally, we can look at total assets and the way they're financed. In the case of LVMH, most of it comes from liabilities and debt. However, when it comes to Kering, most of their assets are financed by equity, and this can be seen much deeper when we use ratios in the next slides.
We have selected these four ratios to compare both companies. We can observe that LVMH has higher free cash flow, meaning that it has a stronger ability to generate cash. But Kering has higher quick ratio, so it's more liquid, meaning that it has a better capacity to pay off its short-term liabilities with its liquid assets. And also, it has a higher equity ratio value, implying that it relies less on debt and has a stronger equity base. However, both companies show similar asset turnover ratios, suggesting comparable efficiency in using their assets to generate sales. Continuing with DuPont's analysis, we can observe that LVMH values of profit margin, return on financial leverage, and return on equity are slightly higher than Kering, suggesting that it's slightly more efficient in converting sales into actual profit, is marginally more effective in using leverage to generate income, and it's also more efficient in converting the equity investments into net income. However, the figures on return on assets are very close, suggesting that both companies are nearly equally efficient in using the assets to generate profit.
Now, if we look at the different cash flows of LVMH, we can also get a better idea, a better impression of what's going on. And we are analyzing the evolution since 2020 until 2022, so the last 3 years. And the main thing that we can see is that the cash flow from operating activities has sort of increased since 2020, which can lead us to conclude that it seems like it's becoming more profitable. The operating activities are generating a higher cash flow, and LVMH has got more cash that it can use for other things. At the same time, its investing and financing activities have become even more negative because it's common for companies, or especially in this industry, to have negative investing and financing cash flows, because that's how also they generate money, they invest in themselves. But I'll let my colleague Luca explain what's happening behind the scenes, the analysis of these cash flows.
As we mentioned, operating activities did grow since 2020, which means there's more profitability and would allow for more spending. However, on the other hand, investing and financing activities fell after 2020, which can be slightly contradictory as we would expect it to rise because of the rise in operating income. However, this shows how their strategy after the pandemic was to conserve cash due to the negative impact the pandemic had on LVMH and luxury goods as a whole during this crisis, because there was a lot of uncertainty. However, by 2022, the investing activities did recover, as we can see by the graph, which shows that they were able to resume their previous levels of investing as they invested in production facilities, store networks, and they also generated employment. And similarly, finance activities also declined after 2021 or in 2021, and the recovery was there, but it was not as big as the investing activities recovery, meaning that they may have generated debt in order to boost this operational investments, which may be an issue, but only if mismanaged in the future.
Without a doubt, LVMH is an outstanding company with great performance. However, there is still one aspect that I would like to emphasize for recommendations, which is the potential downfall of the company. This year, LVMH has increased its investment in the new activities, which is contrasted by Kering, its largest competitor. It's actually increasing the investment. And given the overall dependency of the industry on trends, this can lay the grounds for downfall of the company, as investment play a crucial role in setting trends. Solution for this would be increase in investment, which is not that difficult to do at the current state, where with abundance of resources, leading position in the market, and overall favorable conditions. Therefore, by sacrificing some of the cash right now, LVMH will be able to secure its leading position for years to come.
In conclusion, LVMH is a French luxury good conglomerate with operations across diverse areas such as fashion, leather goods, and other luxury sectors. Financially, LVMH has shown growth in revenue, particularly in the fashion and leather goods segment, and has adapted to modern retail trends by enhancing its e-commerce presence. The analysis of liquidity, solvency, and profitability metrics reveals LVMH's robust financial health and efficient asset utilization and effective cash management. Post-pandemic, LVMH's strategic investment and operational improvements indicate a strong recovery and a focus on future growth, despite initial setbacks during the crisis.